What's up, guys? It's Nick. Just touching base again. Got some time this evening, so just wanted to put some content out. This video is going to be a little bit longer. I know it's late, so I'm going to wait and premiere it in the morning so you guys can kind of have it with your coffee, get the day started off right, and have that macro vision with the micro perspective. That's something that I say a lot. I think it applies more than just the market. But let's get into it. Save you some time this morning for those still going into work. As always, I'm not a financial advisor. I am a licensed professional within the industry, meaning I hold some series within, but I'm not currently sponsored by a firm. So I like to kind of preface just that everything that I'm saying is just an educated opinion on my approach to the market, what I'm currently seeing, and all personal information. So as always, trust your own risk profile, know what's best for you and your trading strategy, and hope you use some of this and find it useful. So getting into it, I know this chart kind of looks like a lot going on here. I got a few different patterns and trend analysis that I'm looking at. I'm just taking it kind of a layer deeper with you guys. I wanted to start with foundational and TA, kind of general charting, and then I'll get into here kind of what these bands are, because these are not just Bollinger Bands. It gets a lot more kind of complex than that, but they're very, very effective in regards to how they're used. So we'll go over the macro for AMC, some current things going on with the executive order, kind of how that reverse repo works, along with the repo agreement in general. We got some very educated people within Rico's Discord who are familiar with the topic, myself included, but we do have a lot of individuals that, not a lot, but there's a couple connections that I have personally with people still on the street who handle kind of margin calls and see like what kind of leverage is being held. And it's all general public information. It's just more so they have a deeper knowledge of this side of the market than I do, because I was on the desk. We knew fundamentals, we knew yield curves and how they correlated with market and what kind of dynamic you're currently in. But there is some details obviously that I don't know, and I think that having that open mind and willing to learn more is really what excels your learning abilities and also your progression as a trader. So we'll kind of get into it here. So this is your 1 day yearly chart. I think we're on a couple years here, so that could fit in this January 21, now that it is over a year, and kind of where we're all sitting right now. So I did take off some of these lines, like that macro kind of rainbow projection that I have. It's down here starting off of this, so once we get into like the 1 hour, we can kind of look into that some more, but I do want to just do a little bit more macro today. Give you an idea of what to expect. I knew today was going to be some consolidation, a lot of selling. We'll get into that in regards to short sellers and what they're trying to do today, because OBV didn't fall, no retail sold, so we'll kind of cover that, give you some peace of mind as you start your morning, and we'll get right to it. So basically, as I said, these are all daily candles, so each candle represents a full day of trading, less the after hours. And then down beneath here, kind of got your MACD. I usually don't do too much of MACD intraday. I use it more for a macro indicator. You got your MACD, these lines here, along with the green and red. Your RSI, kind of the gray line, and then this is your OBV sitting up behind. I just left it down here to keep this a little bit more clean up top. Then obviously you got your volume underneath. And then these are going to be new to you guys, but they're very effective, something that we use on the street, and that I find super beneficial because it does involve standard deviations, which are a factor of a lot of algorithms within the street. So these are called ESD bands, meaning exponential standard deviation bands. You don't have to remember that. They're just ESD bands. And basically what it does is it's a volatility band, like technical indicator. So instead of just Bollinger Bands, basically what these do is it gauges volatility based on an exponential moving average along with standard deviations, meaning it's going to lag the price just a little bit because it is exponential, meaning there's different calculations within. If you want to know, basically it's like It's the equivalent to the root mean square of price deviations from its exponential moving average. So that's honestly above my head, to be honest. You don't have to know all the technicalities to it, but basically it's just more of an exponential moving average. B-bands are nice. They can give you when a movement's going to come, but what happens is it can be to the downside as well. Versus these ones have a standard deviation involved with the calculation. So if you can see this blue line on the inside, that's kind of like your middle Bollinger Band in a sense, but this one's more detailed, and I'll show you kind of how it applies within and what I'm looking at, because a lot of useful stuff within this ESD band here. But we'll kind of hop into it here. So essentially what it does is it gauges volatility. It can be used for trend analysis, and then it's also trend reversal detection. So there's different areas here that I'll kind of cover quickly. January, I don't want to discredit it. I personally think it's a combination of the two. Again, doesn't really matter, whatever gets us to the squeeze, because in the end of the day, market's going to do what it wants to do dynamic wise. I'm going to be staying proactive with it, of course, and keeping an eye on it, but I'll give you an idea of kind of how this indicator works and what I'm looking for. So January, the only reason I'm not super keen on using it is because people knew about it, but there still wasn't like a ton of retail volume in there quite yet. So it was like really caught the hedge funds by surprise, to be honest, and they forced some covering, probably a lot of shorting off the top too, to be honest. But I will still cover it because it kind of depicts this ESD band pretty well. So basically anytime you get over your standard deviation line in the middle here is where you really start to find like your true momentum. You see here's a test of it, a crossover on the daily, or kind of a break on the daily. Here's your full cross on the daily, and you kind of get this strong body candle in between your standard deviation and your upper band. So these ones, unlike Bollinger Bands, it's good, like obviously when they narrow down like this, but as they start expanding, and we'll cover that one here shortly, but you'll notice like as they start expanding here, and this one tested the top one because it broke over down here on the daily, but it tested this top one, and once it tested, these bands start to open up on the daily, so you know like volatility very well could be coming. Next morning, opened up above that Bollinger Band, or not Bollinger Band, sorry, ESD band, and when it did that, that kind of dictated like, okay, like there's a lot of volatility sitting behind this, and sure enough, 2 days later, we hit our peaks. I think it was 24 in the pre-market. These don't catch pre-market hours. Then they shorted it down, and coincidentally, straight down to the standard deviation. So algorithms, certain ones, not all of them, because they are all unique, are basically designed to purchase off of standard deviations. So like there's millions of standard deviations involved within the market. Like this is just kind of a volatility gauge of one, along with these two factors based on exponential coordinates, digits, data, whatever you want to call it. But there are like standard deviations, and I'll show you guys that in another video, to where when they hit certain levels, the algo is automatically programmed to start buying off of those levels, because it does act as a natural support, and then also basically it tracks what this is tracking. It tells you when volatility is expected, and depending on the frequency of the algo, they could have it tuned up to where off of these crossovers they could start buying heavy, or even on the downside, like this is a test off the crossover to the downside. They could even have them set up cough KG to where it just sells heavy at the bid off of these underneath, because you'll notice once they're under, they don't want to back above from the short side, but it just becomes inevitable at one point. So I left my 50 EMA on here along with your 200 SMA. We won't need this one too much, but the 50 EMA is very intriguing to me because the more that I looked at it, there's a few different indicators that can dictate potential future volatility in the near term. So the first one is obviously what I mentioned, kind of the crossover over that standard deviation line. That's a good indication that the following day you could open extremely bullish and kind of get your start to your push up. And then the second one that correlates in more than one area here, well, this one lasts from January to May, is when your 50 EMA, just your EMA, exponential moving average, crosses over that standard deviation line. These indicate Bollinger Band crossovers, so a different indicator. When those cross, you get a Bollinger Band crossover, a true confirmation cross over your standard deviation line, and you test the top of this volatility band here. That's kind of like the best possible crossover you could get for these. It's not needed, but it's kind of a confirmation cross in a sense. Because if you notice, your 50 EMA, like we stayed almost above it basically from prior to that run up all the way into June, which is extremely good. It just means you're staying above the exponential moving average, which is a lagger, but it's just a little bit more close and tight to the candles versus your SMAs, like simple moving average calculation wise. Because if you notice here, same setup, man. It's 511, 521. We cross over that standard deviation on the daily, get a second one, and this third one, we kind of tested the top here, but this third day is when we got that big break, and we'll kind of go over where I think this could be right now. Big break, and then you notice the bands start opening up, so volatility is being released. You get your flare up on the top of this band, which, if I knew this at the time, this should have told me everything. Like, be prepared for this thing to just get ready to start ripping, because staying on top of this for multiple days is extremely bullish, especially when you're crossing over this 1290. Let me move this up just a little bit. When you're crossing over, it's like 1290, 1292 range, right in there. But when you're crossing over that and you're holding, like that was insane that it could even do that. And then the next day they gapped it down, tried to get it back under standard deviation for a couple days, and we all know what happened next. Got a solid run there and showed our true velocity, which is just, obviously I think we could have gone higher, but it's just so crazy to me how people think that technical analysis doesn't do anything and that we just have to hold and wait. Like I'm not gonna sit on my hands if I find tools like this and knowledge that I understand when I could prep for it or help other people with it and relieve nerves or tension. And that's basically why I really started becoming so vocal on it. But we can get into that another day. But this is really cool over on this side, because if you look here, let me adjust this real quick. I'm sorry, this video is going to be just a little bit longer to get some details in. If you look here, these little circles here, these are actually the same ones from the 1 hour candles, where you get your 200 SMA and your 50 EMA crossover. Like that's your 1, here's your 2, and then I'm still waiting on the third over here, which they literally shorted it straight off to the top of it, so it wouldn't cross. But if you zoom in here, this is what's extremely interesting to me. Let's adjust this guy, because it really just like blows my mind. Like I knew that they were strong crossovers, and not that I ever doubted myself, but like it was just a correlation that I made before, even through this ESD graph on here. But if you notice, we've been under the standard deviation basically since December 31st. I mean, obviously back here too. And they just kept it under, and obviously your macro trend is still going to apply. It tried to catch the bottom of this and your 2250 mark, came back above, traded sideways, and then fell off again. Same thing, just hopping down to different support lines and trying to break them all. But then you notice here, end of January, little 1 year anniversary, we had a nice little pop up, 14 up to the 1884 line. broke or tested that standard deviation, but this candle where it's split in half is in the confirmation for me. You kind of need your full body candle, or at least I'll kind of show you as we get over here. Something like this is obviously your confirmation candle. So little doji could be your confirmation, like the body's above it, so that would be bullish enough for me. But with this macro trend, I'd want to make sure that we stayed above it the following day. But it's just crazy because here's those same crossovers, and they're actually the same exact days that we broke the standard deviation on these bands on the 1-day charts. So it's nice, it's reassuring because it tells me what I'm looking at is the right stuff without even having these on here at the time. But it's really cool to see because it's just hugs this line so tight. Like, this is your true battle. Like, this is your true max pain. And I think I got a good theory potentially as to where they get their max pains from, dependent on your standard deviation line. Don't have a ton of time to cover that because I want to keep this somewhat concise at the same time. But anyways, kind of going back to this run over here and where I think we're currently sitting is you'll notice when they shorted us off the macro wedge, the bottom of it hit the bottom of this ESD band, came back up, and then kind of just did a little wave here and came up and started testing this again. So these 2 days in a row to start testing this is what like really intrigues me, because it shows that the volatility and the momentum is there as your MACD is starting to curl up. I could adjust this a little bit to give it a better pictorial, but your MACD is starting to curl up too. You're testing this, the momentum is there, and you get this pop over it, a little touch over it. The next day we had kind of a doji-ish candle. It's where it came back down below, came up and closed right on this trend line. And this was actually, if you look back at my tweets before I started YouTube, this was my confirmation candle. Or, sorry, 315. No, my confirmation candle is this one, based on another wedge I was looking at the time, because I said 315 to 323. No, yeah, 315 to 323 was kind of our zone of strength, and it just kept pushing on through it. And then once we get out of the bands, just kind of like with anything, like you're gonna naturally get pulled back into it. Like coming down to here, like this is really where I thought we were catching was 22.5, because I knew it was so strong. I didn't know necessarily about the standard deviation at the time, but we really should have caught here. If you look at broad market dynamics too, 4-1 is when the market started dropping. Up here is when the market started dropping. Like a lot of conspiracies on it, but it's just too crazy to me. But essentially, this is extremely stretched still. So what intrigues me the most, though, is that we got this kind of support accumulation in this zone, and then we needed some more accumulation down in this zone on the VPR. And then when they kind of tripped it underneath this 1330, that's when it got a little bloody. Again, I thought I was going to catch here. It should have everything made sense to go into this little wedge here, but then that's when the rhombus came about. But this is what's extremely interesting to me, is that 970 dip shot all the way up to the standard deviation line and stopped. It came off of that. Like, that was a strong resistance line, but it showed how much volatility was behind it because it tested the bottom here. And unlike Bollinger Bands, it doesn't necessarily open up and you just fall out like you can. In this case, though, when it tests these, you see a lot of times to test them, it has an initial pop off of it. So that's what happened here, is it gave us that flare, and we tested the standard deviation again. And then on 518, I was really hopeful for this day because this was tracking my model perfectly, and we would have gotten into this wedge here, and we should have broken on this day right here on 520 or 519. Anyways, it is what it is. They took it back under. It didn't get that full body over the standard deviation, so it took it back under, caught your rising macro support. And then you could technically make an argument for one under here, but anyways, this is another one I'm tracking as of really today. It's been proven once you get onto the lower candles here. I just kind of made a micro one at first, and I kept expanding the line and expanding my candles, and I was like, well, let's just extend left on this white line and just see where it goes. And this one blew my mind when I saw it, because that same exact white line is the same one from way down here, basically the same one that hit up and rejected off above the top, hit here, rejected off. Once we broke it here, it got extremely bullish. But it's just kind of crazy when you're doing some simple TA like that and you notice how far back some little line could possibly be going. But I do want to cover kind of some more of this, the crossover that I'm really excited about. So I mentioned the 50 EMA, this yellow line here. 50 EMA crossover with your standard deviation is what gives you your biggest explosions. So sure enough, we got the crossover, and that's what happened. So, and it was a strong candle. Like, that's an extremely strong daily candle. Got that and pushed even higher. They got us off 34, and the SMA at the time, I hated it and felt it just as much as you guys did. But we can only learn and adjust. So what I'm really intrigued about here is that going into tomorrow, I'm hoping, basically what they're trying to do is to break this line here. It's like an 1150 mark that just really goes back historically into the March run, or sorry, the May run, and prior to June. This horizontal line is very well respected, and we're basically down in this bottom corner. It's just this body looks funny. But tomorrow, I'm really expecting this volume shift to kick in, because what happens here is we have our change in volume or change in sentiment, which was that big old test up to the standard deviation line that I mentioned, came off of it, and then they basically pulled the supply dry again. So very similar to what happened here, or right here, is we came up, touched the top of the ESD, came off of it, and obviously it's a little stretched. Like, this is just a volume analysis based on historical data. But then we got our push up. So something similar here, they kind of sucked the supply dry, and then volume is forced to step, essentially. It's called T-whopping. Time weighted average price, I believe, is what that is. There's different names for it, but that's the general consensus of it. But I really like that change in volume here, the low volume today, while also relatively holding. Like, the fact they couldn't get it under 1150 while suppressing us to 24 million volume blows my mind. Kind of back into it. Tomorrow I see our volume rotation starts to where we should kind of get a good kick with an AMC, unless markets are just like completely bloody off of this stuff going on right now. I don't necessarily forecast that happening, but there's a lot of stuff with China and everything else, so I do want to be cautious and kind of wait. Like, tomorrow is a big confirmation day of that trend reversal, so we'll cover more tomorrow and get into that there, but basically that's what I'm expecting, is the shift in volume. 50 million plus would be nice on the day, and what I really would like to do is test this standard deviation again very soon. So I don't necessarily think it'll be tomorrow. It could. I mean, that standard deviation is only sitting at 1268. Like, it definitely, actually, it probably will be tomorrow. So what I'm really looking for tomorrow is a test where we kind of get one of those half body closes, like this guy here, or this one, where we get the half body close, like kind of through that standard deviation line, and then what will happen is we'll get that as kind of a potential movement, like what this should have been until they ripped the SPY down. Um, and then, I mean, Wednesday, Thursday, Friday, like we're only narrowing down this channel. Like if they somehow want to keep stretching this line up into Friday, be my guest. Like this thing's gonna curl down with it too, and we'll just be built up even more tension and velocity because these bands are opening. This one's already starting to open. I know it's coming down, but this one should curl tomorrow. And by the time the 50 comes here, what it's going to be doing is it's riding that 1640 line that I reference pretty frequently. It's what we needed to break basically to go in May, and that's what sent us over. So in the 50, your standard dev crossover, and you get like some sort of Bollinger Band cross like this too. Like I think it's gonna be early next week, guys, and I don't know if it's gonna result in a full squeeze. It could with this macro break as well. I know that sounds pretty crazy and out there, but I have a lot of suspicion that there's a lot of volatility hit up between here to where this thing's really gonna rip on this next go. It's just I want to make sure that we got our confirmations in, what's set to go, and just really how we're looking. So I'm not saying squeeze next week yet, but I do see at the very least a push to 22.5 in the next 3 to 5 sessions. I would say 3 to 5 sessions we'll be back above 22.5. So about next Wednesday, roughly next Tuesday or Wednesday, conservatively. So we could even do that this week. I don't want to talk out of my neck or anything like that. But this could get violent in a hurry, and it could even be this week. Like we could test that this week and go even higher. So a lot of very positive stuff going on right now. That's just kind of what I'm looking at with these standard deviations. Tomorrow's going to be fun, should be explosive, and just strap in because it's been a journey. It's been taxing and hard to kind of sit through at some points, but it's gonna seem like peanuts when we're getting something like what we had in June. Like it'll be very explosive, and just I don't know if they're gonna be able to contain it or what exactly it's gonna want to do. I wanted to take it day by day. Like we could get another rejection off of 34, come down to 28.5 or to 22.5. Like don't YOLO your account is what I'm saying. And then in regards to kind of the executive order, with it being a few days away and we're already pressing a 30-minute video, I'm going to just sideline that guy for a different video where I can kind of give like full focus to it, because it is a loaded topic. I don't want to make a 40-minute video for you guys to sit through, but I did kind of want to hit on that standard deviation well and what I'm looking at in regards to this. Obviously we track SPY to an extent, but I know there's a relief coming in SPY. Like all of your TD indicators are flipping to 13s. I'll put the link in my description on kind of what that means, but like your TD sequential, and then I can't think of the other one off the top of my head right now, but they're flipping to 13s, meaning they're signaling a reversal on the broad market, because it's hitting off some major trend lines and stuff is just extremely oversold. So we get that pop to 405, 415 range on SPY. I think that's going to be where we approach this crossover of your standard deviation and the 50 EMA. So we're close. Like I think we could see 22.5 up to 52 within the next 1 to 2 weeks. 22.5 up to 33, 34. I don't know why I have 33 there. Within the next 3 to 5 sessions. There's just a lot of big movements coming. So basically, once we break 52, it's to the races. Like I don't think they'll be able to contain us until we approach 100. 115, 125 is kind of the range I'm looking for. But I'll definitely be trimming out some options through here into here. Like have your own strategy for your risk profile and what makes sense for your account. Because I have plenty. to hold on to for 52, 72, and above. They go out to next year in July along with shares. So set yourself up best for success for you and you alone. Appreciate you taking the time to watch this. I know it was a little bit longer, but I think this is some really solid information. Again, this indicator here is your ESD band. So depending on what platform you use, it's an exponential standard deviation band. So hopefully that helps. Appreciate you tuning in. Like and subscribe, and let's have some fun. It's gonna start getting hot here.